Welcome to the Entrepreneur Academy Workshop Session 2, brought to you by the Coastal Plain Regional Library System. I am your host, Elizabeth Ray. To tell you a little about myself, I currently own a small business and I've operated it for the last 10 years. I've set up and I've advised many individuals to create their own businesses, and today I'm going to run through these basic steps for setting up your own business for success in the state of Georgia. I am an enrolled agent and I prepare all things tax related, from income tax returns, payroll tax returns, and bookkeeping for taxes. My expertise does lie in this field. Additional past experiences that I have lie in working for local governments such as zoning, codes, historical commissions, and downtown economic development. What does all this have to do with you? Well, both of these types of work give me the qualifications and a well-rounded knowledge to be able to advise you on how to successfully and legally set up and run your own business. Today, we are going to go through the session 2, which discuss session topics such as I'm a business and I can prove it, setting up accounting, income versus expenses, and what does that mean? A home office, it seems like that would be pretty straightforward, but there's actually some different choices under the tax code. Secure payment methods and how to accept them. What are self-employment taxes? Because don't forget, if you're self-employed, you have self-employment taxes. And then finally, we'll touch just a little bit on marketing. And finally, certainly not least, stress management. So when we started this session, we're jumping right into I am a business and I can prove it. We made it clear on the first session that you have to be seen as a legitimate business in order to be able to justify yourself to the federal and local governments for taxation purposes and for the most favorable taxation purposes. And in order to do that, we talked last time about how to set up a business plan, how to buy your name through the state, how to get your proper identification numbers as a business. And now that you've done those things and you know this is where I am and I need to move forward, what do we do with that information? So this is just taking it a step further of I am a business and I can prove it to my investors, to the local government, to the state government, and to the federal government. One of the main things you need to do is you need to take the information that you received from the printouts that we discussed in the first session. And they're going to be your federal identification numbers, your articles of organization. And you're going to need to take those and set yourself up a business bank account. Do not get checks in your personal name and put it in your personal account and start messing with your personal checking account with your business. These need to be separate. So to set up a bank account, you do bring a copy of your IRS federal identification number to open that account. Also, here is something I see over and over again. You make sure that you note in your checkbook and in your accounting documents what your initial investment into the bank is. So what does that mean? Well, if you're lucky enough that you got a check and your very first investment is, hey, I have a $5,000 check because I've already earned money and I've done everything right and this is the first amount of money I've ever made and I'm putting it straight into the account, etc. Great. But then you're about 0.005% of the population. Most people are going to need to spend money for expenses to set themselves up. So what does that initial investment into the bank mean? You are taking money from your personal account or from a loan or for somewhere else, and you're putting it into that bank account. Is that income? No, that's your investment. Yes, it's income because you're putting it into the account, but it is your initial investment, and you have to identify where it came from. Another thing when you're doing a business bank account, A lot of times banks are going to require a larger initial deposit for a business account. They'll charge you a monthly fee if you carry less than a minimum amount in that bank account, and all of a sudden you're paying like $25 a month because you don't have a minimum amount in there. Make sure that you do your research for the banks. Call the bank first and find out, what are your minimum requirements? Do I have to buy business checks at first? How much do you charge for certain things? It can cost you money. Most of the time, a small credit union is your most business friendly for these types of issues. Not all the time, but most of the time, a credit union is your most business friendly for these issues. I also want to take just a moment to say there's no one bank, there is no one entity, there is no one business that during any of this presentation we are trying to promote. This is simply based on my personal experiences as a business owner, my personal experience working with the government and individuals, stating that this is what I have seen many times. There is no promotion of any one entity at all. Next, what do? You have an in-home business. You've decided you're going to have an in-home business. I'm going to have a service business. I'm going to set up. I'm going to do whatever. I'm going to sell insurance through my home office before I open up a big office somewhere else, okay? This is my first steps. You can't just decide you're going to do that. You have to go ahead and call your local government, and you have to determine, do you need a business license? And you have to determine, am I allowed to do this? You even have to look, if you live in a homeowners association, you have to look and see if it's allowed to have an in-home business through your homeowners association. And you've got to do all these steps to see, do you need a business license? Is an in-home business allowed? If it is, what are some of the rules that I have to follow? Here's an example. I personally do have an in-home business. I'm allowed to have up to 2 customers at a time. So what does that mean for my neighborhood that I live in? If I have 5 cars out in the driveway that are not normal to every day, and my neighbors certainly know what vehicles I own, then they can call code enforcement on me, and I can be fined because I had to know I'm allowed to have an in-home business. I am not allowed to have anyone park just anywhere. I have to let them know where they can park according to where I am. And I'm not allowed to have more than 2 cars at a time in my drive. So these are things that you may not think about initially, but it is very important. Okay, determine your accounting and tracking methods. So you have income versus expenses. We're going to talk about doing it by the category, by the month. Some examples of how to keep track of your information is QuickBooks, Excel sheets, or just a good old-fashioned notebook paper. Okay, and we will go through what that means and how to do it. Also, don't forget things like your mileage apps. Mileage examples are here. Again, not promoting anyone, but these are the ones that I see most often. Also, do you need a mailing address? Do you have a business that you want people to actually come to your home? Do you have a professional space? Do you want everybody in the whole world to have your home address on the website, on your business products, etc.? Or do you need to have a separate mailing address, like a P.O. box? You have to protect yourself, and you have to also set up a level of professionalism, okay? So these are things that initially you may not think about, but that's the whole purpose of these. That's why the Coastal Plain Regional Library System is doing this, to let you be successful in going ahead and setting up before you move forward. Okay, so you have a business we're going to assume that you are able to meet all the codes and able to do all the things you're supposed to do. And you're going to set up a designated space in your home for a workspace. Also, create yourself a business email. Create yourself a business website. These are all things that should be in that business plan. Get that small business insurance. Oh no, I didn't think of that. There's so many types of business insurance, okay? Some of these you won't need at first. Some people, depending on what kind of small business you have, you may need every single one of these. And the very last one of these, I'll just touch on in a minute, a lot of people are just now thinking about. So the first one, general liability. Let's say that you are going to have people coming in and out of your home, or you're going to get deliveries. You found a great wholesaler. You're going to have them deliver your products to you. You don't even have to drive in order to pick anything up. But somebody trips and falls on your property. Oops. Who's liable for that? If you want to be a true LLC, then you need to get your insurance through your LLC, and you need to make sure that you have this general liability insurance. Or what if you make a product and someone gets hurt by it, or someone is, there's some sort of damage caused by your product? Also, a business owner's policy. This will protect you from personal lawsuits and business property damage. What types of equipment are you using, etc. Workers' compensation insurance. Now, this is only something that you need if you're going to have employees. And you may need someone who comes in and helps you, and you're going to pay those people. You are required to have workers' compensation insurance. And then there's cybersecurity insurance. So this is something that's in the world of business and taxation and all. This is somewhat new. Obviously, it's not new because it's been out there a while as far as there's insurance for it, so it can't be too new. But in the world of insurance and taxation, etc., there is cybersecurity insurance. In fact, just a little nugget of information is, as a tax professional, every tax office has to have a cybersecurity breach plan. We have to have cybersecurity plan of action on how we are protecting customer information, and how we have set things up in the office, and that every single employee or person that works has to sign that every year. Like this year, 2 years ago, they created that, being the Internal Revenue Service, that if you have a tax office, you actually have to sign off that you have this in place before they will allow you to prepare tax returns. It's serious enough that your government is saying you have to do this. And you may not think about it. Like if you have a customer's personal information, you may not think, well, that's not a big deal. It is a big deal. This is something that could be security breached, and it's a new must-have. Now, there's some free versions of a cybersecurity breach plan, but the key is implementation. Just because you print it out and do it, read through it, know what it is you're doing. It is so very important. So here are some starting the nuts and bolts of the accounting part. What is the key to accounting? And the key to accounting is going to be good record keeping. And what you want to do is figure out how you're going to keep up with your records. I want to emphasize a few things on this slide that I have seen over and over and over in my 14 years of doing tax returns and helping people with accounting and bookkeeping. I want to emphasize some of this because it's so important. And it's funny because people just don't think of it this way. How do you keep up with your records? Well, first of all, it's suggested that you go ahead and you do it monthly. don't let a whole quarter, don't let a whole 3 months go by and then all of a sudden, oh, I need to get this together. Because you know what that means is if you're not keeping up with it on a monthly basis, especially your first several years, but any successful business, you have no idea how much you're actually spending, how much you're actually making, where your information is, etc. You need to keep up with this on a monthly basis. Now, it's also good to do it by expense on the computer. Okay, so we're going to go over in just a moment about what kind of expenses and what that means. But honestly, a simple way to do it, especially when you're first starting out, you'll get more complicated and you'll figure out your groove and exactly how you want to do things. But at first, buy yourself 12 of the large envelopes and write January through December on each. An envelope for January, an envelope for February, etc. Every single month has its envelope. And you stuff those receipts into that envelope. I don't care if it's on the check statement. I don't care if you got a company credit card and it's on a company credit card. Because guess what? If you went to Walmart and you purchased some paper that day because you happened to be there and you were smart enough that you went ahead and you put it, you did it with a business account, even though you were there to purchase personal items also, but you separated it. All that auditor is going to see, if they were to look through your books, is Walmart, and they're going to want to see what that Walmart receipt said. That's why you're keeping the receipts. That's why it's so important. So at a minimum to start with, even your first several years, just do it monthly and keep all of your receipts. Now, the next thing I've seen over and over is that people say, oh, my bank statements are all online. I can get to them at any time. Not true. Most of the time when people are going to be audited or the government's going to look through your books, most of the time it's not going to be, just within the last year. Okay. So what happens if they're going to audit you 3 years back? Or what happens if they audit you for 2 years ago and they look and they're like, they didn't do such a great job. I think I probably should go ahead and look at the 3 years ago as well, or 4 years ago. They can keep going back until they feel like they're satisfied. So what happens then? Those online statements aren't there. So you better be saving that information to a computer and to a separate storage drive, and or printing out those bank statements. Because I've had people, I saved it, but the computer, I got a new computer and I never transferred the information over. That's why I said a separate storage drive. Now, why did I say this can save you hundreds of dollars? Because every time you go to the bank and you ask them to print you out some statements that somebody has to go back in their drive to find, and they have to pay their person, they're going to charge you for it. So why not be smart? Go ahead and print out the bank statements, save it to your computer monthly, save it to a drive every time, and this really can save you. I mean, I've seen people pay, one bank was really ugly and charged them $100 a month, but as a general, it's like $500. It'll cost you, if you have to go back several years, it'll cost you anywhere from, several $100s. Schedule time to do this at least once a month as well. I mean, if you're going to do it right, and schedule yourself some time to do it. So we're scheduling time to do something. What is it we're scheduling? We are scheduling a time to keep up with our incomes and our expenses. Here's a couple of examples. Now, one of the things I want to talk about on the income side, I touched on it earlier at the very beginning. On the income side, there are the two categories that I listed. They are supposed to be listed under the income. Okay, but they're not really taxable income. So if you make a sale, okay, and you that is going to be a taxable income. If you make a commission, because sometimes it's a sale, sometimes it's a commission. It depends on who you're working for, how you're working, what you're doing, etc. But a refund in this case is, let's say you go to the store, you buy 3 boxes of paper, you realize you only need 2 boxes of paper, and you return 1 box of paper. Guess what? That's a refund, right? So it doesn't go under expense anymore. It goes under as a refund. That's not taxable income because you've already put the sale of it in one time. So you need to make sure it's shown as a refund. Also, personal investment. Remember how, and this happens all the time, you'll be surprised how many times on your first 2 years this happens for most businesses. So you started your account, you went and opened it up, you brought over, you weren't one of those lucky people that had a $5,000, somebody purchased something, although I don't know how you would have paid for all of the all of the expenses unless you had income. So someone made an investment to get you started. Someone did something to do a personal investment to get you started. And typically it's yourself. And so let's say you put $5,000 in as a personal investment. That's not income. You're not supposed to be taxed on it because you took that from your current account that you were already taxed on. So you have to label it. Throughout the year, it might be that, oh, I got to sell, but I need to buy these additional items. I don't have enough money in the account. So I'm just going to transfer from my personal account into my business account. This happens all the time. Okay? Make sure that you label it. This is a personal investment, and make sure for your taxes that the person doing your taxes, whether it's yourself or a professional, knows this was a personal investment from my account. You don't want to count that $5,000 as income. You want to count that $5,000 as personal investment. Why pay taxes twice on it? Okay, enough said on that. Now, expense categories. So you have some cost of goods sold. What does that mean exactly? Well, you're going to do a product. You're setting up your own little creating t-shirts or creating signs for businesses, whatever it may be, a little vinyl shop. So you go and you purchase a shirt and you purchase the vinyl to put on the shirt, and then you're going to create it. Well, the shirt is something that you purchase to sell. That's a cost of goods sold. The vinyl is something that you purchase to put on the shirt. The equipment is not. The equipment is something different. So the equipment you use is something that you would put in under equipment, okay? Startup cost, and I have a whole slide on that we'll get to in just a moment about what that means. Your first startup costs you're able to do, which are obviously it says are organizational. You're able to take that off over up to a certain amount your first year, and then anything over a particular amount you're able to take off a little bit over the next several years. Depreciate it. Advertising, okay, we've talked about marketing. If you spend something to create business cards, if you actually pay someone to do a website or to do a marketing strategy, etc., this is all under advertising. Utilities. So depending on what kind of home business you're going to do, or if you just went ahead and went out and you have a storefront, you're going to keep up with your utilities. Look, don't forget that professional memberships and subscriptions are very important for 2 things. It also says, I am a professional business. I am plugged in. I'm a business and I can prove it. I am plugging in with other professionals. I'm reading up on the current trends on how things are going. Don't forget that. That doesn't mean that I'm telling you to go and sign up to participate in 10 different memberships, but you definitely need to be involved with something, whether it's a professional magazine prescription or online newsletter or something. It is important, and it's also important to network. Office supplies, postage, contract labor, we're going to talk about that for just a moment. Sometimes you need to pay someone to help you because they have a level of expertise that you don't necessarily have, and that's okay. In fact, that's proving that you are taking it seriously. I'm not an expert on all things, and I know where my weaknesses are. You have to actually get their information. And what I mean by their information is you need to get them to fill out some paperwork for you through a W-9. And it will have their name, their social security number, their address, and you have to keep up with how much you paid them. There are legal requirements. If you pay someone at least $600 or more, you are legally required to send them a 1099, unless you're in fishing. And if you're in fishing, if it's $400, then you have to send them one. But here's the thing, keep up with it. As soon as you think you're going to need some help, you immediately have that person fill it out, because the government is going to want to know who you paid, because guess what? They want to see if they paid their taxes. Education. Don't forget about education. Constantly, you should be looking for better ways to learn how to do better, be better, and provide the best product. Expense category, you see I even put it in kind of big letters on the bottom. Don't forget your business mileage. For every business mile in 2021 is worth 56 cents, and that can add up quite quickly. All right, so let's go to the next slide and let's talk about some startup costs. So startup costs are organizational setup fees. If you're going to pay someone, we talked about in the business plan how to be truly seen as legitimate, how to get investors, how to get someone who wants to feed into your business, and how are you going to stay on track. So let's say that you pay someone for research development, or you pay a consultant to help you, I don't know, do the marketing portion of your business plan because you're not good with that. Then those are organizational setup fees to help you get started. Let's say that your in-home business is a starter kit. Let's say that you're working for Mary Kay or an Avon or a Norwex or any of those type of small businesses that we've all heard of. Tupperware is another one we hear of a lot. A lot of times you'll have some sort of starter kit that you'll need to buy into in order to show the product. Those are all startup costs. And then training costs when you're getting yourself familiar before you start your business, okay, your training costs. So this is anything that you're doing in order to become educated, in order to figure out how you're going to set yourself up to move forward. Okay, so business mileage. This one is so big that we have, I wanted to give you the, what do I mean? So the tax law requires that you substantiate your expenses by adequate records or by sufficient evidence to support your own statement of mileage. So anyone who has not done a Schedule C before, which is pretty much what we're talking about, a sole member Schedule C on your tax return. One of the things that's asked of you is how many business miles did you drive? So on that particular schedule, you're going to write a number in, okay? So, and I do not, okay, there is no magic number. I hear this so many times. Oh, I put 50,000 because I knew that was the maximum I would be allowed before they looked at me. Or I did 5,000, or I did. Okay, people, there is no The only magic number there is if you actually drove the miles and you have adequate records and sufficient evidence to support it. You do not just write a number because somebody said it was good or that number deducts enough off that I think I'll take that one. This is the key here. What does that mean? The following information is what would be required for the IRS for any audit purpose, okay? So let's say that you went somewhere November the 13th of 2020. Why did you go? We're going to go to be educated. We're going to go to the local library in order to do a seminar or to watch something. I'm leaving from my home office address, and to get there and to come back round trip is 45 miles. The next day or 2 days later, on this date, I have to go to the bank because I actually made some money. I'm going to whatever credit union, XYZ bank. I'm leaving from my home office, and to get to the bank from my home office, it was 8 miles. At the end of the day, at the end of the month, you add up your total miles, round trip, and write that amount down. You don't even have to write down the deduction amount. You just write down the miles. I put that there just so that you could see how much that was worth, because you may not think much of it, but it really starts to add up. And that's how people get really happy about, oh, this is awesome. I bet the maximum I could do is 50,000 miles. No. The only magic number is expenses that you have adequate records and sufficient evidence, okay? Now, that's the mileage expense. There's also another way, and some people get a little confused with this. I want you to know that most taxpayers, most businesses go ahead and take the mileage because they're able to kind of keep up with it, just like the example on here, by month, and you're done, okay? You also can do actual expense method. For this, you determine what it actually costs to operate your car for the portion of the overall use of the car. Well, what does that mean? Well, let's say that you drove, for round number purposes, let's say that you drove 10,000 miles total for the year on your vehicle. But you use that vehicle to pick your kids up from school, to take your parents to the doctor, etc. And you also use that car for business, to go for education, to go to the bank, to pick up supplies for your business. You have to keep it separated. So if you used 5,000 miles for your business and 5,000 miles for personal, then how do you think that you would be able to deduct things for your oil, for your repairs, for your tires, etc.? Hey, it's 50%, right? It's the amount attributable to the portion of the total miles driven that are business miles. You do have some more things that you can do. You know, you'll keep up with your gas receipts. So you're still keeping up with mileage, but for a different reason. You're proving, again, proof, adequate records, that, hey, this gas receipt or this oil or repairs is for a portion. It's actual expenses. You do not do both, okay? You do not do both. You must choose. And you don't flip-flop. So if you decide you're going to take actual expenses, you're going to be staying with that. If you decide you're going to take mileage, you need to stay with that, okay? You can make a determination to change, but it is not recommended. It is not recommended. Okay, so one other thing, I don't want to go back, but I do want to tell you that I did include at the beginning of this session some apps for the mileage, and it will keep up with it for you. So you have to remember to push the button to say this is for business, but you can type it in, and then you're not trying to go back and recreate. And there's even these great, the apps are so good now that you're actually able to print a report out at the end of the month. So business meals, All right, this is another issue of we've been taking some benefits have been taken away the last couple of years. Again, just like hobbies, no longer allowed to take the expenses off. You just have to write the income you made. For business meals, we don't have as much leeway as what we once did. So the documentation is still the same requirements that they always have been, but the actual benefits and the amount we're able to write off is different. And again, this is from currently under the tax code. It's from 2018 to 2025 is the 50% total amount is what's allowed versus up to 100% in many cases, especially for the sole proprietors. So to write off a business meal or coffee expense, you can't just go meet up with your buddy and I'll just keep the receipt. You have to pay for the business. You have to have a business related discussion and you have to pay for it. So what? So I've had people bring receipts in over the years and they took the receipt, but I didn't recognize, it didn't say it was made from a cash payment, from cash in pocket. Instead, it had some account number I wasn't familiar with. I know it wasn't the business account. So I was like, well, what is this account number exactly? Oh, well, we discussed it, and I gave them the cash for my portion, but I didn't have it that day, so they paid for it, and I gave them the cash. I can't prove that, and if you think an auditor's going to accept that, forget it. No, you have to pay for it, and it has to be on the receipt. You need to keep the receipt, and you need to write on the receipt what it was for. What was the purpose of the meeting? What did you discuss? Make sure that it does have the date, the time, and the location. These are typically all on the receipt with the items purchased. You don't want a summary receipt. Sometimes you'll also see that. But it needs to have on there, like if you had 2 cups of coffee and 2 bagels, it needs to be on there. Not just the total is this amount. Again, they want to see what it was for. Pay with your business card from your business account. The whole purpose of setting up a business account was to use it. Don't go and pay for it out of your personal account. When you start mixing my personal account and my business account, and I'll just pay some expenses from this account because it's in there and I don't have money in the business account right now, you are then telling an auditor or whether they're from the state government or from the federal government, that they have permission to now look at your personal accounts. Because guess what? You just mixed them. That's your fault. If you do that and you claim a deduction, you are allowing them to look at your personal checking account as well because you mixed it. Finally, the deduction amount, again, is just the 50% off the total amount paid for right now. That is how much you were able to actually deduct.